this stream is more dedicated to understanding how Oracle, in combination with Morpheus and Dozer, can help you within the stock market. Traditionally, my primary focus is on cryptocurrencies, but at the end of the day, technical analysis can be used for any assets, and I definitely do utilize other assets. And therefore, for this stream, what I'd like to do is check out some of the stocks that I have interest in or I have some investments in, and maybe some of the more popular ones, just to see how well these indicators perform in those traditional markets. Let's go into here and make sure we start on a higher time frame. So we're going to go to 60-minute time frame in our Oracle indicator, and we're going to select the 1 hour time frame here. Over here I've got my wish list, some of the assets that I watch. And so what we'll do now is focus on looking for good setups for longs and shorts. So we'll just start with a very popular one, Tesla, for example. What you want to do is, before we start setting, drawing any kind of support and resistance, we're just going to go back over here, and we are going to see where the built-in support and resistance channel from Oracle, where it was on Oracle. Let me just remove the background colors here. So here we go. So essentially, the center of this, the yellow line, is the center of the channel. You'd really be wanting to look for short setups the higher up on the channel we get, and looking for long setups as we get higher, as we get lower down at the bottom of this green area. So with the fact that it's above, that's not a bad reason to take a short. Dozer has worked its way across to the top. When it hits these two red lines, it's typically a good short setup. So that's another confluence. I'm above. It's a slightly riskier trade than I would like to take, but I would definitely consider it if I was looking to take trades on the stock market. So we've come from the top, we're working our way down, we've got money flow sort of going downwards. And the issue here that you have is that actually we've already come into an area where you would be looking for a long setup. So already it's a little bit of a riskier trade, and we had a pretty hard drop here. So typically when you see this, there's going to be some form of a retrace, typically, not always, where you have a hard and a big drop. You're going to see some kind of a retrace here. So let's just play that out and see what happened. And there it is, that retrace right there. So essentially, let me just zoom right in for this so that you guys understand. So if you actually look, this would have been your entry that you would have, let me open up my shortcuts here. So the entry that you would have naturally taken would have been right here for a full entry for your short position. However, if you noticed from that entry, in the next hour of price action, we had a retrace to take a 1% discount. So as I said, when you have a big drop like this after an Oracle signal, there's always going to be a retrace. Some of the things that you could look for a retrace would be measurement of this candle and a third or halfway of this candle, or you would look at this white line. So this white line, I'll show you what that is right here in the settings. That is your 21 exponential moving average. So as you could see, the price wicked right into that and dropped. So let's kind of rewind for a moment. I know some of you guys are joining in now as well. So let me just kind of like reiterate what's going on here. So we just do a quick recap, and then we're just going to fly through this because I do want to look at several other things. So you've got your Oracle. We were using the replay. The setup at the time where this printed is actually below. It's in the green area. Typically, you want to look for a long in that area. However, in this case, we've seen that we've had a nice big momentum wave and a red dot. The price is working its way down, and Dozer has made its way down on this candle, would be the previous candle right here. It hasn't crossed the center of the Dozer indicator, so that's a good sign. It's about to cross. Money flow at the time was pointing downwards. And so then the question becomes, do you just take an entry right where this is, or do you look for a retrace? And where would that retrace be? So you could do a third of the previous of this candle, a third of the way up, halfway up, the full candle, Or in this particular case, because it's a big drop, there's going to be a retrace, and the 21 is going to be a very good place to look for a short setup. And I always like to front run the levels. That means that I would go slightly below, like 270 or 270.5 is where I would get in. I would never put the actual entry right at the 21 EMA. So that being said, you've now entered into a short position using the 1 hour time frame on Tesla. Everybody knows what Tesla is. It's not some weird stock that nobody knows about. So really your entry could be up here. Okay, your entry could be, let's say somewhere, I'll just go roughly around that area. And already you're in great profits. Okay, so you could even be shaving profits already. And so ultimately when this gets to the bottom here, you definitely, and you get to the bottom down here, you definitely want to start thinking about taking some profit. So this is profit taking right here. Like this is, if you're an intraday trader, that's 4 hours have gone by, or 3 hours, sorry, candle close. You entered on this candle in the discount, two more hours has passed. So in total, 3 hours of time has passed. And now you've entered into your trade. Dozer is working its way down. Money flows on, the momentum wave is on the opposite side. Typically when the price retraces down, this is the Oracle channels, when it retraces down to this green area, especially this last one, that's when you start looking for, I'm not calling it a full reversal, but you're going to see a reaction. So you're going to see a price move back up. Okay. And so here we go. Already you could see, there you go. So that if you hadn't taken profits there, the price is working its way back up. You see that? So the price is now working its way up. Dozer's turned around. The momentum wave has turned around, and now the price is working its way back up. Now, does that mean there is going to be a full rotation to the upside? Not necessarily. That's one thing I want to be very clear about, okay? The point is, this was a phenomenal trade for an intraday trade. It took you 4 hours to get, let's say we went into this entry and we took some, even if you took 50% of your trade, if you took a short position, over here, you would be able to take some, depending on leverage you used and whatnot, you would be able to take a 4% without leverage trade in a single day. Okay, so pretty huge for the stock market. So now what you want to do is you want to say, all right, so this, where's the price going to go? Why isn't it going to go all the way to the top? And that's where your next part of this video comes in. So we looked at one asset. We'll look at a couple of other ones. But what I'll do is just to catch your attention, if you're watching the video, to recognize that these indicators do work on the stock market. That's the very first point. Okay. The second point here is that now what we'll do is look and see how we could draw support and resistance, basic support and resistance, that would then enable us to apply that to other stocks, for example, these ones here, and then see, based on support and resistance, how well Oracle, Morpheus, and Dozer would work. That's what we want to discover. For that, I guess just for the sake of changing it up, maybe going to another asset. Actually, no, we'll stick to Tesla. So just go to the hourly, daily time frame, okay, and we're just going to look for some basic support and resistance. Sometimes I like to go all the way out to the weekly, depending on what kind of a trade I'm looking for. But I'm going to show you the concept of drawing some basic levels so that you get it. So look, this is an easy one. Like, you would just connect this point to that point right there. And I want that to be very visible on my chart. But look at this point and this point, right? These 2 points were resistance points. You've got a massive resistance line across the top. You can then draw a very strong support line from the bottom. And again, we're going to call this high time frame support. So already you've got something to start building the rest of your technical analysis. So these two are great. We've got a big resistance. We've got a strong support down here. The next thing we're going to do is look inside of this. Right in this area, I'm seeing a bit of a channel going on. So I'll show you how to look for that one. So you use the same 2 points. Okay, and we're just going to bring that up to here. All right, let's just, I'll go for the second one, and then I'll go into a lower time frame and fix that right now. So just let's go to daily time frame now, and let's clean this guy up. So you could see we've got some price action now. You're wondering, you know, where's the top, where's the bottom, and I'm going to show you how you can magically finite. So you can see the 2 taps off the top, the bottom holding, another tap, and the top so far, right? So you got a beautiful top, bottom. We're still using the replay, which is great because now you're kind of looking back in time. So the next thing you want to do is you want to open up your channel here, and I just want to change the color of this so that it's more visible. And then we're just going to reduce the time frame once again. So we're going to go down to like a 4-hour time frame. And now I want you to pay attention to the center of the channel. So you've got your price goes up, bounces off the center, goes all the way to the top, comes down, plays a lot around the center, finally loses the center with a high volume candle, almost retests it for a continuation all the way down to the bottom of the channel. A double bottom, 4-hour time frame double bottom is not as visible. If I went to the daily or 2-day, you would see a perfect double bottom here, 2 candles, and then price goes back up, rejection off the center of the channel, support off the center of the channel, work its way back up, goes above the channel, which is faking people out because they're looking for a breakout and potentially looking for this level if they had that level drawn out. Massive big candle, rejection, it can't hold the price, it gets rejected back into the channel. So now the next thing is, what else do we got? So you got another support that you could draw would be, you know, from down here. Let's say that, you know, you would draw this one. And we're also going to look at drawing one from here to maybe here. Let's see. So the reason that I would pick these and start drawing them the way that I'm drawing them, they're not random. They may seem random, but they're definitely not random. The reason is that it's the amount of bounces that you get off of something, right? So as you can see here, all these bounces off the bottom, the top, we've now got a beautiful channel. We're now looking for intraday trend lines. That's what we're looking for. And if I go to a lower time frame, as you can see, I keep going lower and lower and lower, and you could see now the price is actually bounced, right? Bounced, right? 2 bounces, and now we might get a retest off this. So now we can actually replay, okay? Now we'll go back, turn on our Morpheus back to 1-hour time frame. So as you can see, we kind of like deviated away from the hourly time frame, drew all our levels, and now we're back. We've taken a short position. We're gonna see what happens here. Is it gonna break back above this level, or is it gonna continue down? And that's another reason why you would maybe hold a trade. You don't necessarily, you maybe take 50% off the table and hold the trade to see what's gonna happen next. So we'll go next candle. So we keep watching and we keep pressing the replay button and saying, and it keeps working its way down. That's why you have confluence upon confluence, and then you get a nice short setup. So now going back to the beginning, if we took a short there, all the way down to here, there's a 7, almost 8% trade. Stock market, VMC Oracle, Morpheus, Dozer, VMC indicators. So I don't think there's any question of does it work on the stock market, but for the sake of making sure that we're not only looking at one thing, we'll pick another asset here. We'll just go to Netflix, because I actually have not looked at Netflix today, so I don't know how the performance is. So, you know, you've got, here's a prime example of where the price reversed, right? Went back up to the entire top of this candle right after the print. So again, if you took the discount zones, which I said you could take the top of the candle, the center of the candle, or 1/3 of the way up. But let's say you took the top of this candle, then you could have a nice 3.3% trade. If you took that, look at this again, the second candle retraces your discount zone halfway all the way down. If you took it to this one, 2.5%. So yes, the indicator does work. Was this a good trade? Yes, it was a really good trade. You've got a divergence, Dozer's working its way from the top. Is there any kind of a resistance? That we don't know. But that's the point, is that you would use the same theory from the previous chart that I just showed you on Tesla, and you would then create your support and resistance, and you would go to higher time frame and create that. Okay, let's look. If you actually took the close of the candle, you would have gone in 2%. And again, with stock market, it's not like cryptos where you could hold your position 5, 10, 20%. 1-2%, you got to get out. You know, I would say the term that I coined, 1% is your friend, way back in 2001. is probably going to be the most relevant to the stock market than anything else. Okay, here's an example of one that did not go well, and that would probably be based on the fact that we don't have. First of all, you're losing the 21, but you're going directly into the 200, which is way stronger than the 21. So the green and orange lines are the 200 EMA. So in this particular case, that would be very visible, and you're shorting into the 200 EMA. Typically, a breakout over the 200 EMA, a retest, a move to the upside is what you're going to be looking at in the stock market, or in any market rather. Any market is going to be playing off of the 200 EMA. So here's an example, right? You get the close of the candle, you get the price going all the way back up. Again, was there any kind of resistance? So the question really has to become, like, if I looked at this, right? If I was looking at just this area of price action, then my support and resistance, very rough, by the way. I'm not going to spend the time to show you how to do that again. This is my channel, right? The price is dancing. I've now broken above that. And unless I get a close down below here, there's really no reason to take a short. So, and if you look at this short setup right here, money flow is actually moving to the upside. So, you know, there are reasons why that trade, even though it's an Oracle print, doesn't mean that it was a good trade setup. And so that is what makes it significantly more accurate when you can learn to draw basic support and resistance. I think the concept is pretty straightforward. You know, like there's a beautiful one right there. Divergence, move to the upside, hits the top red one, okay, which is very important with dozer. And then the next candle, you get this short setup. And ultimately, if you actually rode that all the way down to the bottom, you are looking at a 62% trade. So the question is, does Oracle work? Yes. Does it work 100% accurately? No. Does it work significantly better with other indicators such as your Morpheuses and your dozers? Yes. Does it work even better by combining it with support and resistance? Absolutely. Can you be a profitable trader utilizing these three indicators on the stock market? And the answer to that is absolutely. But the catch is you need to learn to draw basic support and resistance. If you don't have basic support and resistance on your charts, there's a high probability that you are going to fail at trading despite what indicator you use or what technique you use. Thank you for watching. Please like and subscribe. I'll catch you guys later.